So now we will be revising the chapter Audit Strategy, Planning and Program. So since we are done with revising the content from Standards on Audit, so now we will be taking up the chapter for revision, which will be Audit Strategy, Planning and Program. So in this chapter, along with this concept of Audit Strategy, Planning and Program here, even materiality related content also we are going to discuss here. So what and all we are going to revise? So one is we are going to talk about planning of an audit of the financial statements. Along with that, we are also going to focus our discussion on materiality, how to determine the materiality. So all that things also we are going to focus. So in fact, when I say I'm going to revise audit strategy, planning and program, that entire content from the chapter has been taken from the standard SA 300. And whatever discussion regarding materiality which we are going to have, that is actually taken from SA 320. So when I say I'm going to revise this chapter audit strategy, planning and program, I'm actually trying to revise the two standards on audit. One is SA 300 and the other one is SA 320. So SA 300 is a standard talking about overall planning of the audit of the financial statements, whereas SA 320 is actually talking about determination of materiality and all. See, along with these two standards, I have already told you that out of 13 standards which you are supposed to discuss in the chapter standards on audit, one standard actually I have kept it on hold. Do you remember that? So that standard is SA 450. SA 450, I have kept it on hold. I told that SA 450 will make more sense when we are done with understanding the concept of materiality. So that also we will try to cover here. So when I say I'm trying to revise this chapter, in fact, in this session, in this entire session, I'm going to revise three standards now. SA 300 I'm going to revise, SA 320 I'm going to revise, and even SA 450, which is talking about evaluation of the misstatements, that also we are going to completely cover here as a part of this particular chapter's revision. Okay, so that's what going to be the agenda. And one more thing, let me give you a caution here before starting this chapter. See, in this chapter, the concept is very less. The overall concept is going to be very less. Why? Because see, the concept is very small here. Most of the questions in this chapter will be point-wise questions, like what factors you will consider in establishing audit strategy, what are the advantages of audit strategy, what are the benefits of audit strategy, what are the advantages of audit plan, what are the advantages of audit program. So like that point-wise questions will be more. Concept oriented discussion very limited we are going to have here. Okay, so having said that, first I will take up SA 300 related revision. So we'll try to understand about planning. SA 300 is a standard which is actually talking about a planning of an audit of the financial statements. Guys, if you pay close attention, every activity at our personal level, at our professional level, before we want to do any activity, we do a lot of planning. For example, you are going for a destination, so you are going for a tour. For that you do a lot of planning. Or you are sitting for your examination, for that you are going to do a lot of planning. So for so many of our professional and personal activities, before we actually start doing that concerned activity, we do a lot of planning. So even when you are doing audit also, for example, there is a client X Limited, they have approached an auditor and asked them to conduct the company audit for them. Now this auditor, whenever he wants to do, before he actually starts doing that audit of the client X Limited, he needs to spend some amount of time in planning his entire audit. Sir, why planning is required? Ignore audit, any activity you take. Why the planning is required? Why? Because if you have a plan in place, the work which you are doing will be in your control. If you have a perfect plan, if you have spent some time on planning an activity, the things will be in your control. You will be able to achieve your outcomes. You will be able to complete the task within the timeline. So if you want to have control over the activity which you are doing, if you want to complete the activities within the time, if you want to complete the activities as expected, as planned, or if you want to achieve the objective of the work, whatever you are doing, we need to definitely spend some amount on planning. Even audit is also not an exception for that. If we want to achieve the objective of the audit, if we want to do the audit in a perfect way, if we want to complete the audit in a timely manner, if we want the audit to be in our control, whatever audit we are doing, that should be under the control of the auditor. So if you want the audit process to be in control, even while doing audit also, you need to spend significant amount of time on planning of audit. Able to understand? So like any other activity, even planning of the audit is also highly important, highly crucial. It will contribute to the effectiveness of the audit. Now, so when it comes to planning of audit, the planning of audit will generally happen in three phases. The planning of audit involves three steps, you can say, or you can say the planning of audit goes through three phases, you can say, or three stages of planning, you can say. Whatever names you want to give, you give it. I will simply say planning of audit involves three steps or three phases it will involve. So planning of audit involves three steps, which are: number one is, first you have to establish the audit strategy. Number two, on the basis of that audit strategy, you have to develop an audit plan. On the basis of that audit plan, you have to develop something called audit program. You have to develop something called audit program. So what are the three stages of the audit planning, guys? If someone asks you what are the three stages of audit planning, number one is establishment of audit strategy, then development of audit plan, then development of audit program. So planning of audit actually happens over this three phases. Now let us try to understand what do you mean by this audit strategy, what do you mean by this audit plan, what do you mean by this audit program. So first I will concentrate on strategy. See, strategy is a very simple one. It is the most summarized version of the plan. Nothing but in the audit strategy, what I'm simply going to do is I'm going to decide on time which I require for completing the audit and how many resources I want for completing the audit. At the stage of development of audit strategy, or development of audit strategy simply means coming to a conclusion regarding within what time you are expecting the audit to get completed and with what number of resources you are expecting the audit to get completed. So nothing but I'm going to set the overall scope and timing of the audit. That happens in the audit strategy. Simply, if I have to put, take for example, if my client X Limited, I am the auditor. My client came to me and told, sir, you do the audit for me. Now, first thing what I do in the planning is to complete this audit, how much time I want. For example, I have decided that for completing this audit, I need 10 days of time. And for completing this audit, how many resources you want? You need engagement team, no? I have decided for completing this audit, 15 engagement team members are required. So you have decided that within 10 days of time, and with the help of 15 engagement team members, you will complete the audit of X Limited, in which your objective is to obtain reasonable assurance and express the opinion. That is simply your strategy. This is simply your strategy, overall approach which you want to follow to achieve the objective. So this I call it as simply in this case, I have established my audit strategy. So what is my audit strategy? I want to complete the audit within 10 days of time and I want to complete the audit with the engagement team of 15 members. I have decided on resources as well as time. And during this time of 10 days with the help of these 15 resources, my objective is to express an opinion on the financial statements of the entity. That's all. This is what the audit strategy done. We are done with audit strategy. We decide on only two things: time required for completing the audit, resources required for completing the audit. That's all. Planning process is over? No, that you have just started the planning process. You have just told 10 days you want, 15 resources you want. Planning process is not just over with that. Now what you should do is you have to allocate this time and resources among different tasks which you have to cover in an audit. You have to allocate the time and whatever resources you have divided, the allocation of time and resources should happen. So now what I will do is I will take a Excel sheet or I will take one document and I will list out what are the various activities which are required to be covered in the audit. Take for example, first I need to perform risk assessment procedures. This work is assigned to engagement partner and two audit assistants will assist him. And the time required for completing this risk assessment procedures is 1.5 days. Then compliance procedures. In the compliance procedures, we need to verify internal controls. There will be internal controls in assets also, liabilities also, incomes also, expenses also. Assets related internal controls will be verified by engagement team member Mr. A. He has to complete the work in half day. Liabilities related internal controls will be verified by Mr. B. He has to complete the work in another half day. Income related internal controls will be verified by Mr. C. That will be completed within 1 day. And expenses related internal controls has to be verified by Mr. D. That for that time allocated is 1.5 days. Similarly, we will have substantive audit procedures. In the substantive audit procedures also, assets will be there, liabilities will be there, incomes will be there, expenses will be there. Who is going to take care of which work? Assets related expenses will be, asset related procedures will be allocated to which person and how much time is required. So simply, if you observe here, the document which is there here, I simply call it as audit plan. Simply call it as what? Audit plan. So what basically is happening in the audit plan? See, whatever resources, whatever time which I have decided in my audit strategy, that allocation I am doing, that time and resources I am allocating among different tasks. Whatever time I have decided in the strategy, whatever resources I have decided in the strategy, that I am going to allocate it among different tasks which I am required to take care of as a part of my audit. That document which allocates the time and resources among different activities, that I call it as audit plan. Understood? So simply in the audit plan, in the process of development of audit plan, what actually happens is we simply try to allocate time and resources among different tasks which are required to be carried out. Then we have something called audit program. See, actually audit program is the most detailed version of the plan. Audit program is nothing but what? Most detailed version of the plan. If you have a quick recap, whatever we have done till now, in the audit strategy, we have decided time and resources. In the audit plan, we have allocated time and resources. Now, within the time allocated, what exactly needs to be done? The detailed set of instructions, the audit procedures required to be performed, all that detailed instructions will be given in a document called audit program. Take for example, expenses related substantive audit procedures. This work was allocated to Mr. E. The time allocated for him was 2 days. Now this person, Mr. E, while verification of expenses within the time allocated of 2 days, what and all procedures he needs to perform. So I will try to give a detailed instruction. So for example, I am telling in the expenses, try to take a sample of 10%. Whatever expenses are there more than 1 lakh rupees, try to verify inspection. Whatever expenses are there which are more than 10 lakh rupees, try to obtain external confirmation. Right. So, and I'm also telling how much samples I have to take in purchases. So in fact, within this 2 days of time, what and all detailed instructions I have to follow, what and all detailed audit procedures I have to apply. So that details I have to include in one document called audit program. So what is going to be there in the audit program? It contains a series of instructions which are required to be followed in each area, the procedures which are required to be applied, the number of transactions you have to verify. So all that things will be included in a document called audit program. See, there will be audit program for each and every item which is there in a plan. So for assets also there will be audit program, for liabilities also there will be audit program, for incomes also there will be audit program, for expenses also there is going to be audit program. So for each and every activity which is listed out in the audit plan, there will be one detailed audit program which will contain the instructions which are required to be followed and procedures which are required to be implemented. So that detailed document, we call it as audit program. So what actually happens in the audit program? It contains a series of instructions. What instructions the auditor is required to follow, the engagement team is required to follow, what audit procedures that are required to be performed. So the detailed instructions regarding audit procedures to be performed, methods to be applied, techniques to be applied. So all that will be there in a document called audit program. Clear everybody? So this is what the meaning of audit strategy, audit plan, audit program. And the development of this entire audit strategy, audit plan, audit program, this process we call it as planning of an audit. See, there is a difference between audit plan and planning of audit. Planning of audit is a process. The process of development of audit strategy, audit plan, audit program, that process we call it as planning of an audit. Whereas audit plan means it is a document which contains the allocation of work. Both are actually different. I hope you have understood what I am trying to say. So planning of audit is a process, the process of development of audit strategy, audit plan and audit program. That process we are going to call it as planning. Whereas audit plan is a document which contains allocation of time and resources. That's it. Clear? And if you see here, between audit strategy, audit plan and audit program, which is the most summarized, audit strategy is the most summarized version of the plan. Is the most summarized version. Which one is a more detailed version? Audit program is a more detailed version. Clear everybody? So that's all. This is what simply you have to understand regarding the concept. If you understand the differences between audit strategy, planning and program, the questions in this chapter, the concepts in the chapter are going to be very easy. They are just point wise questions. Like if you want to develop audit strategy, what factors you will consider, how audit strategy will assist the auditor. If you want to develop audit plan, what you have to include in your audit plan. If you want to develop audit program, what points you have to consider, what advantages will be there, what disadvantages will be there. All the questions will be like that only. Clear? And one more thing I want to say here, see, between when audit strategy will be developed, before risk assessment procedures or after risk assessment procedures. When we will establish overall audit strategy, before performing risk assessment procedures or after performing risk assessment procedures. First of all, what actually happens in the risk assessment procedures? What we do in the risk assessment procedures? In the risk assessment procedures, we try to obtain an understanding of entity, environment and its internal control in order to identify and assess the risk of material misstatement. See, in the audit strategy, as I have told, you will decide on two things: the time which you require for completing the audit, the resources which you require for completing the audit. Now, will you decide on this timing and resources before understanding about the entity or after understanding about the entity? After understanding about the entity. So what I want to say here is, first auditor will perform risk assessment procedures. By performing risk assessment procedures, he will get to know about the entity, what is the size of the entity, in what environment it is operating, what internal controls it is having. It will the auditor will try to obtain understanding of these things. On the basis of that understanding, he has to establish the audit strategy. Yes or no? Why? Because without understanding the entity, without understanding environment, without understanding internal controls, how can you decide how much time you want for completing the audit, how many resources you want for completing the audit? Without understanding about the client's business, how you can decide it? Even if you decide without understanding the client these things, will it be appropriate? No, it is not going to be appropriate. So that's why your audit strategy will be accepted, your audit strategy will be reasonable, your audit strategy will be helpful only when you have decided it after performing risk assessment procedures. So risk assessment procedures will happen first, and on the basis of outcome of the risk assessment procedures, auditor is going to develop a audit strategy. Clear and comfortable, everybody? So this is what regarding the introduction. Now with this background discussion, we can easily revise the content which has been given in the questions. Okay, so let us start with the first question. What are the factors which are required to be considered by an auditor in establishing overall audit strategy? So if you want to establish audit strategy, as I've told, first and foremost thing which we will develop is audit strategy. Now, when you are establishing audit strategy, simply you are deciding how much time you want, how many resources you want for completing the audit. So in establishing audit strategy, what factors you will consider? If you are deciding how much time you want for completing the audit, how many resources you want for completing the audit, you will not say whatever comes to your mind. You will take that decision after considering some factors. So what factors you will consider in establishing that overall audit strategy? What things you will keep in mind in deciding that time and resources? So in the answer, they have given the factors. So the following are the factors which we will consider. Number one, we will try to understand characteristics of the engagement. See how much time I want for completing the audit, that I will come to know only when you know about your client. What is the size of your client? What process, what activities they are doing? How many locations they are having? Yes or no? So first thing which you need to consider is characteristics of the engagement. Nothing but you have to understand about your client's business, how many products they are doing, how many segments they are having, how many locations we have to audit. So first thing you have to consider this factor, then only you have to decide the timing and resources. Number two, even you have to ascertain the reporting objectives. Is there any timeline for submitting your report? How many reports you are required to submit? Is there any management's timetable for completing the audit report? So you will try to understand even reporting objectives of that particular engagement. Then you decide on the timing and resources. And also you will consider certain factors that in the auditor's professional judgment you will feel as significant. So apart from characteristics of engagement, apart from reporting objectives, if you feel that as an auditor there are certain other factors which you feel it as important, even that factors also you will consider in establishing overall audit strategy. Sir, what are the examples of that factors which could be significant in the auditor's professional judgment? So we have here examples like significant industry developments, like recently there was change in industry regulations, there are new reporting requirements, there you will try to allocate extra time. And significant changes in the financial reporting framework, might be applicable financial reporting framework might have undergone some changes, so that's why you might be required to spend some extra time. Or other recent significant developments such as changes in laws and regulations, etc. So like this, there are if there are any other factors that in the auditor's professional judgment, if he is feeling them as significant, even that factors also he will consider in establishing overall audit strategy. And even you have to consider the results of preliminary engagement activities. Guys, this we will talk about it later. What are preliminary engagement activities? I will come to this. After that, I will complete this fifth point first. Then we will talk about this preliminary engagement activities in a detailed manner. So one more factor which you have to consider in establishing audit strategy is knowledge gained on other engagements. For example, if for the same client you have performed some other engagement. Last year you have done tax audit for the client. In the current year you are doing company audit for the same client. Now you want to establish for the current year what is the audit strategy. Can you use the knowledge whatever you have obtained in the previous year's tax audit in developing audit strategy for the current year's company audit? Yes. See, what I'm trying to say here is there is a client X Limited. For the financial year 2021-22, for this company you have done the tax audit. The same company asked you to do the company audit for the year 22-23. Now for this 22-23 company audit, you have to develop audit strategy. In developing this audit strategy, can you use the knowledge which you gained in the last year by performing tax audit? Yes. Even use that knowledge gained on other engagements also for establishing overall audit strategy. So overall 5 factors you have to consider. What are the 5 factors which you have to consider? Characteristics of the engagement, reporting objectives, factors that in the auditor's professional judgment are significant, and even you have to consider the results of preliminary engagement activities and the knowledge which you have gained on other engagements. Now let us focus on this preliminary engagement activities. Important from the examination perspective, please pay complete attention. So what are this preliminary engagement activities? What is the meaning of preliminary engagement activities? You might have heard about this term preliminary. What do you mean by preliminary? Something which has to happen before commencement of certain activities. So when I say preliminary engagement activities means these are the activities which will be performed before actually starting the audit. Before you actually begin, before you actually commence doing the audit, you will perform some activities that I call it as preliminary engagement activities. Sir, what kind of activities will come under preliminary engagement activities? Here I have given the list here. The following activities are included in preliminary engagement activities. What are they? Procedures required to be performed by SA 220 regarding continuation and acceptance of the client relationship. If you remember, as per SA 220 also we have seen, before we say yes to the client relationship, we will evaluate 4 factors, no? Checking the integrity of the management, competence, competence of the engagement team members, compliance with the ethical requirements, significant matters which has come across during the previous audit assignments. We'll consider 4 factors or not? Yes. When you are you doing it after starting to do the audit or before you actually start doing the audit? We will try to do these 4 steps, like checking the integrity of the management, checking the competence of the engagement team members, checking the compliance with the ethical requirements and significant matters consideration. This we will do even before we say yes for the audit. So since we are doing this thing as per SA 220 regarding acceptance and continuation of client relationship, this one activity will fall under preliminary engagement activities. Number 2, evaluating compliance with ethical requirements. Even you will check whether if you accept the audit, were you in a position to comply with the ethical requirements or not. That evaluation also you will do. That also will fall under preliminary engagement activities. And even you will establish an understanding of the terms of the engagement. Nothing but you will draft a engagement letter. You get it signed by the client. So in the engagement letter, terms and conditions all will be recorded. This is also something you are doing before you start doing the audit. So establishment of engagement letter is also one of the preliminary engagement activities. And even you have to communicate with the predecessor auditor. This is the requirement of Chartered Accountants Act itself. So if you are accepting any audit for the current year and for the last year the position was held by another chartered accountant, you have to communicate in writing with the predecessor auditor, then only you can accept the current year's audit. This is also one of the preliminary engagement activity. Clear everybody? So when I say preliminary engagement activities, these 4 activities will get covered here. Evaluating the factors before accepting and continuing a client relationship, checking the compliance with the ethical requirements, establishing an understanding of the terms of the engagement, nothing but drafting of the engagement letter, and even communication with the previous auditor. These 4 things, these 4 factors you will evaluate. These 4 activities we call it as preliminary engagement activities, and by performing this preliminary engagement activities also you will get some information. Also use that information in establishing the overall audit strategy. See, we need to focus more on preliminary engagement activities. So preliminary engagement activities, we have to talk much more detail. See, this content has been added in the new scheme. This content was not there under old scheme. Okay. So regarding preliminary engagement activities, let us go a little bit deeper. Why? Because it is important from the examination perspective. So as I've told, first preliminary engagement activity, what is that? We need to perform procedures regarding continuation of client relationship and audit engagements. See, not just continuation, guys. Before we accept and continue client relationship, we need to evaluate some factors. First of all, we have to see when we need to take a decision regarding acceptance of client relationship, when we need to take a decision regarding continuation of the client relationship. Very simple, guys. This point I think I have already covered in the nature, objective and scope itself. Assume that some new client with whom you did not work previously, if a new client is coming to you and asking you to do some engagement, what decision you will take here? You will take the decision whether to accept this client relationship or not. Sometimes existing client, the client with whom you have worked in the past, now existing client is coming to you, but he is asking you to do some new engagement. Last year for one client you have done the tax audit. In the current year, the same client is coming to you, but he is asking you to do company audit. So existing client only, but he's asking us to do new engagement. Here also we'll take a decision whether to accept the relationship with the client. Accept this new relationship with the existing client. Sometimes what will happen is existing client only will come to you. He will only ask you to do existing engagement. Like last year I have done the company audit for the client. In the current year, the same client is coming to me and asking me to do the company audit. So here existing client is asking you to do existing engagement. Here we will take a decision whether to continue the client relationship or not. So before you accept the client relationship, before you continue the client relationship, before you take this decision, there are certain factors which you have to consider. There are certain factors which you have to consider. Sir, what are those factors, sir, which I have to consider? So you have to consider integrity of the principal owners, nothing but honesty of the top level management, like board of directors, those charged with governance. Competence of engagement team. Before you say yes to a client relationship, you have to evaluate whether your engagement team members are capable enough, whether you have capability to complete the audit. Accept the audit only if you have capability. If you don't have the capability to complete the audit, stay away from that kind of engagements. And even you need to consider matters that have arisen during current and previous audit engagements. If you have done the last assignments, if you have done some other assignments from the client in the past, so during that previous assignments, if you faced any struggles, even consider that information in saying yes or no to the client relationship. So that's what they say here. It should be ensured that appropriate procedures regarding acceptance and continuation of client relationship has to be followed. And in this point they are telling, when we take a decision regarding acceptance, when we take a decision regarding continuation of the client relationship, nothing but the same thing I have tried to summarize here in this chart. Now in this point they say the factors, actually what matters we will consider, like we will consider integrity of the management, competence of the engagement team members, and even matters that have arisen during previous audit engagements. And also in case of initial audit engagements, you have to even communicate with predecessor auditor, even you have to communicate with the previous auditor before you accept it. So these are the things which you need to perform before accepting and continuing client relationship. Now second preliminary engagement activity, if you pay attention here, the second preliminary engagement activity is compliance with ethical requirements. As an auditor, what are your responsibilities to check regarding the compliance with the ethical requirements that we have elaborated here in detail? The auditor shall continuously evaluate compliance with ethical requirements, whether all your engagement team members are complying with the 5 ethical requirements: integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. Whether all your engagement team members are complying with that requirements or not, you have to continuously evaluate. And also you have to check the requirements of independence. You should also check whether your engagement team members are all independent or not. Sir, what is the meaning of independence? Independence means judgment of a person is not subordinate to the wishes and directions of another person. That means you should not your decision should not be changed according to the wishes and directions of other person. That we call it as independence. And particularly throughout the audit engagement, the engagement partner shall remain alert. Being an engagement partner, you have to remain alert. You have to make observations, you have to make inquiries to check whether any of your engagement team members made any non-compliance with ethical requirements. Throughout the audit, you have to remain alert. And as an auditor, if some matter comes to you, as an engagement partner, if some matter comes to you that engagement team have not complied with ethical requirements, you have to determine appropriate action. In case as an engagement partner you came to know that your engagement team members are not complying with the ethical requirements, you have to take appropriate action. Next, and finally, the engagement partner shall form a conclusion on compliance with independence requirements. And how he can do it? How, as an engagement partner, you can form a conclusion whether there is a compliance with the independence or not. You have to form that conclusion. How you will form that conclusion? You have to obtain relevant information from the firm to identify and evaluate circumstances and relationships that create a threat to the independence. That means you have to first obtain information. What kind of relationship will create a threat to independence? What kind of circumstances will create a threat to independence? First obtain that information. And if you found any breaches, if you found that any of your engagement team member has violated independence, find out is there any threat to independence for the entire audit engagement. And if at all, if you found any threat, take appropriate action to eliminate the threats. In case if you are unable to eliminate the threats, withdraw from the audit engagement altogether. Now, coming to the next preliminary engagement activity. So if you see here, the next preliminary engagement activity will be this one: establishing an understanding of the terms of the engagement. So as we all know, establishing the terms of engagement, nothing but mutual agreement between the auditor and the client regarding the terms and conditions of the audit is also very important. And how do you think that understanding of terms of engagement will happen? That understanding of terms of engagement is going to happen by way of engagement letter. Clear, everybody? Able to understand? So these are the preliminary engagement activities. So whatever content I have explained, that is actually newly added. So very, very important from the examination perspective. So there are high chances for asking a question from the preliminary engagement activities. So whatever it is, so till now we are done with only question number 1. We have understood what are the factors which are required to be considered in establishing overall audit strategy. And as a part of that, we have understood what are the various activities which will be involved in preliminary engagement activities. Till here, everybody comfortable? Now coming to the next question. So we are done with question number 1. Now coming to the next question. So going forward, the revision is going to be very easy and simple. So coming to the question number 2, which is asking about how overall audit strategy will assist the auditor in development of the audit plan. Guys, one more thing here you have to always remember. First, always we will establish audit strategy. On the basis of the audit strategy, we are going to proceed for the development of audit plan. See, why I'm telling you this is very frequently they have tested one true or false statements in the examination. So they say that, see, this is actually the true statement, whatever I have highlighted here. So the sentence says, the auditor shall establish an overall audit strategy that sets the scope, timing and direction of the audit and that guides the development of audit plan. So first, auditor is going to establish audit strategy. It is going to set the overall scope, timing and direction of the audit. On the basis of that, we will develop the audit plan. This is what the process. But in the exam, how they will ask you a true or false statement is, they will say the auditor shall establish an audit plan that sets the scope, timing and direction of the audit and that guides the development of audit strategy. This is how they will replace the terms audit strategy and audit plan. So in that case, the statement is going to be false. Why? Because first we will develop audit strategy, which will set the overall scope, timing and direction. On the basis of that, we develop the audit plan, not the other way around. So this question has been tested in the true or false statements multiple times, high chance of testing in the examination once again. So you have to be very careful. So please mark this statement. So now the question is, if you develop overall audit strategy, how that will help the auditor in development of the audit plan? Or sometimes they even might ask you a question, what are the benefits of the overall audit strategy? So even if they ask you the question, how overall audit strategy will assist the auditor in the development of audit plan, or even if they ask you the question, what are the benefits of the overall audit strategy, we are going to write the same thing. So what are the benefits of overall audit strategy? Number 1, you can come to know the resources to deploy for specific audit areas. For which area, how many resources I want. For inventory verification, how many people I want. For purchase verification, how many people I want. For fixed assets verification, how many people I want. So you can take a better decision regarding the resources to deploy. Next one, the amount of resources to allocate, the number of resources to allocate for specific areas. See, actually, the first point they say, when they say resources to deploy, they are talking about expertise. First point, they talk about expertise. In which areas I have to allocate experienced engagement team members, in which areas I have to allocate less experienced team members. Whereas second point is actually talking about number of the resources. See, first question is addressing which resources, nothing but should I engage, should I deploy experienced resources or non-experienced resources. Second point, they're actually talking about how many number. Like for example, in physical verification, I want 5 people. In that 5 people, how many experienced, how many non-experienced. So like this, you can take better decision regarding which resources to deploy and how many number of resources to deploy for each kind of audit area. And also when these resources are required to be deployed, when you have to assign the work to the engagement team member. So this third point is addressing when. Third point is addressing when. Nothing but, for example, if you are starting to do the audit on 1st of April, you are starting to do the audit. See, on the beginning of the audit itself, you don't need 10 engagement team members. Initially, for 2-3 days, you can complete the work with 5 members. And when the risk assessment procedures are completed, then you want 5 more staff. So if you have decided I need 10 engagement team members for completing the audit, might be this engagement team members not required from day 1 itself. Some engagement team members can join after a certain point of time. So that decisions also you can take when the resources are to be deployed. And also if you have an overall audit strategy in place, you can easily manage your resources, you can direct them, you can also supervise them. And also you can betterly plan when the meetings are required to be held, briefing and debriefing meetings among the engagement team members, when these meetings are required to be held, and how engagement partner and manager reviews are expected to take place, when the verification of the engagement team members work should happen. So these meetings you can betterly plan. So if you have overall audit strategy in place, this is how it will assist the auditor in the development of the audit plan. Or as I have told, even if they ask you the question, what are the benefits of overall audit strategy, we are going to write the same answer. Next one. So we have seen 2 questions regarding audit strategy. Now they talk about plan. Sir, what aspects are required to be covered in development of audit plan? So what and all things will be included in your audit plan? So first of all, as I have told, before we develop this audit strategy and audit plan, first we need to perform risk assessment procedures. So we need to obtain information regarding client's entity, environment, and its internal control. So basically, mainly we focus on understanding the entity and its environment. Then we will develop a audit strategy. So that's what they say. The auditor should plan his work to enable him to conduct an effective audit in an efficient and timely manner. And the plan should be developed on the knowledge of client's business. You have to get the knowledge of the client's business, then only you have to develop the audit plan. And in your audit plan, what has to be done? See, in the audit plan, what we do, like I have told you in the introduction, in the audit plan, we will try to allocate the time and resources among different activities. So in audit plan, for which and all activities you have to allocate the time. You have to allocate some amount of time for knowledge of the client's accounting system and internal controls, etc. Nothing but we should allocate some amount of time in the audit plan for performing risk assessment procedures. Number two, we should also allocate some amount of time for establishing expected degree of reliance to be placed on internal control. Nothing but in our audit plan, we should allocate some amount of time for compliance procedures also. Why? Because in the compliance procedures, we actually try to verify internal controls, whether they are operating effectively or not. And on the basis of that, we will decide whether reliance on controls can be placed or not. So when they are asking you, you have to allocate the time for reliance to be placed on internal controls, they are indirectly referring you to, you have to allocate some amount of time for compliance procedures as well. And also you have to allocate some amount of time for nature, timing, and extent of audit procedures to be performed. Nothing but here they are talking about substantive audit procedures. So in your audit plan, you have to allocate or you have to cover in your audit plan some amount of time for risk assessment procedures, some amount of time for compliance procedures, and even some amount of time for substantive audit procedures. And guys, if you take for example, if you want to complete the audit within 10 days, will you do the work till the last day? Even on 10th day also you will spend the time on doing the work only? The answer is no. See, if I have planned the audit for 10 days, for 8 days I will allocate the work to my engagement team members. The last 2 days will be kept for discussion, forming a conclusion, coordination among the engagement team members. So when I decided to do the audit for 10 days, I will not keep on doing the work till day 10. So I need the last 2 days for discussing our observations, for having the meetings, for forming a conclusion, drafting the audit report. So all these formalities are required to be completed. So that's why you should even allocate some amount of time for coordination of the work also. Clear and comfortable, everybody? So you should, in your audit plan, you should cover risk assessment procedures, compliance procedures, substantive audit procedures. Don't just allocate all the time for procedures only, even try to allocate some amount of time for coordinating the work performed between engagement team members. Nothing but for having the meetings, forming a conclusion, drafting the audit report, and all this administrative work. Clear? So these are the various aspects which are required to be covered in an audit plan. Now, so what are the benefits of planning of the audit of the financial statements? Once again, direct straightforward question. If you plan the audit, how it will be benefited? You will come to know which areas require more attention, which areas require less attention. And you can identify and resolve potential problems on a timely basis. You can properly organize and manage the engagement team members. If you have a plan in place, you can manage your engagement team. If you don't have a plan in place, it becomes very difficult to manage your engagement team. Selection of engagement team members with appropriate levels of capabilities. Even if you have a plan in place, you will be able to select more appropriate engagement team members who are deemed fit for doing the work. And also, if you have an audit plan, it will help you to direct and supervise your engagement team members, and even it will promote the coordination of work done by auditors. So these are all the advantages of developing an audit plan. Next one. See, question number 5 is very, very important. See, we are all telling that knowledge of the client's business is important before we can develop an audit plan, audit strategy. So without the knowledge of the client's business, even if we develop an audit strategy and plan, that is not going to be that effective. That we all know. They're not questioning this. We all know this. We all agree to the fact that yes, knowledge of the client's business is very, very important before we can start developing audit plan. But the question here is, when I say you have to obtain knowledge of the client's business, what specifically you will try to obtain knowledge about? The question is not about why knowledge of the client's business is important. They're not asking that question. We all know knowledge of the client's business is very important before we can develop the audit plan. But the question here is, okay, knowledge of the client's business is important. But when I ask you, for example, assume you are my article assistant. I call you, we got audit of some client. I called you and told, boss, from tomorrow we are going to do this audit. First thing what you have to do is go and obtain the knowledge of the client's business. Now you are an article assistant. So when I told you obtain the knowledge of the client's business, what you will specifically go and understand about, what things you will try to obtain knowledge regarding your client's business. So that is what this question about. So if you see here, you see the question carefully, knowledge of the client's business, it is one of the important principles in development of overall audit plan. What understanding the auditor shall obtain. They're not asking you why you have to obtain the knowledge of the client's business. They are asking you what you will try to obtain the understanding about. So what you will understand here, see, very common sense. For example, if I ask you, you are my article assistant, if I told you to go and obtain the knowledge of the client's business, what you will try to obtain? First, you will try to know about the industry to which the client belongs to. Is it in the is it in automotive segment? Is it in a FMCG sector? Is it in a metal sector? So first we will try to understand the industry to which our client belongs. Regulatory requirement, what kind of laws and regulations are applicable for it, and other external factors including applicable financial reporting framework. So first you will try to understand what industry your client belongs, what regulatory requirements are applicable, what is their applicable financial reporting framework. These things you will try to understand. And after that, nature of the entity. So once you understood about the external factors, now you will try to understand about internal matters, like what are the operations. For example, if the client is manufacturing entity, is it labor intensive, is it capital intensive? And you will try to understand about ownership and governance structure, who is holding more than 51% of the shares. So what is our governance structure? Types of investment, where the company is going and making their investments. And also you will try to understand how the entity is structured and how it is financed, what kind of financing the client has obtained. So first you will try to understand the external factors. Once you are done with understanding external factors, then we concentrate on the internal matters. And we will also try to obtain knowledge of clients' accounting policies, what accounting policies they are following. Like for example, for charging depreciation, what accounting policy they are following. Are they following SLM or WDV? If they are following SLM, is that method appropriate? So we'll try to obtain understanding of selection and application of accounting principles. And if at all there is any change in the accounting policy, we will try to even understand what is their change, what is the reason for that change also we'll try to understand. And whether entities accounting policies are appropriate. As I have told, whatever accounting policy, whatever accounting policy your client is applying, is that appropriate? That accounting policies also we have to understand. Next thing, we will even try to understand what are the objectives of your client company and what strategies they are following. See, every client will have some risk. We'll try to understand what kind of potential risk every kind of client faces. What specifically your client faces. For example, your client is a FMCG sector. There will be specific kind of risk which are applicable for FMCG sector. Your client is in restaurant industry. A restaurant industry will have certain kind of risk. So we will try to understand what objectives your client is having, what risk they are facing, and what strategies they are following. That also we try to understand. So the entity's objectives and strategies and even related business risks also we'll try to understand. And here even they give here examples of potential business risk. See, this point they have a high chance of testing in the examination. They might ask you, as an auditor, you should try to understand the potential business risk which your client is facing. Give a few examples of potential business risk. So they are just asking you what kind of risks will be faced by different kinds of organizations. Generally, they are not talking about in specific terms. Generally, what kind of business risk will be there? Examples they are giving here. Number one, failure to keep up to date with new products, technology or services. This is especially in the case of mobile sector, mobile phones sector, electronic sector. If you don't remain updated with the new technology, you will be thrown out of the industry. Nokia is one of the best example for that. Excessive reliance on a key supplier, product or individual. See, if you are excessively relying on only supplier, if tomorrow something happens to that supplier, you might also go out of business. That is one risk for certain entities. Lack of personnel with expertise. You are not having enough of staff. You don't have resources who are having expertise in their respective fields. Or insufficient or excessive production capacity. If you don't know what is your supply demand, sometimes you do either excessive production or sometimes you will do or you will sometimes have insufficient production. This is especially a risk in the case of restaurant industry. If you don't properly estimate the crowd which will be visiting the restaurant, if you have prepared extra food, excessive production, that will go waste. That you can't resell it. For example, if you have made a lower estimation of the crowd, you have prepared a less food, then your customers might go to others. So insufficient or excessive production or loss of financing, your client might be losing the finance due to withdrawal of financial support from the bankers, creditors, etc. So like this, different entities will have different business risk. You try to understand that business risk, what objectives they have, what strategies they follow to overcome that. And finally, even you should get to know about entities' financial performance, how they are financially performing over a period of time. So what is their financial performance? Are their profits increasing? Are their profits decreasing? So all these things also you have to understand. Clear? So that is what particularly we will try to understand. Knowledge of the client's business is very important. But if they ask you what exactly you will try to know about the client's business, this is what we will try to know about the client's business. Clear, everyone? Next one. So audit planning is a continuous process. See, like we have told in the risk assessment procedures, understanding of the client's business is a continuous process. And just now I have told that knowledge of the client's business is required for development of audit plan. Previously in the risk assessment procedure, I told understanding risk assessment and internal control chapter, I have told understanding the client's business is a continuous process. And just now in this chapter, we have seen that if we have to develop an audit plan, first we should understand the client's business, then we have to develop the audit plan. And whatever knowledge we have obtained regarding client's business, that can change over a period of time, no? See, even understanding the entity is a continuous process. Even development of audit plan is also a continuous process. Even development of audit plan, development of audit strategy, this is also a what? Continuous process. Sir, what do you mean by audit planning is a continuous process? Throughout the audit, we'll be doing planning only? No, I don't mean that way. When I say audit planning is a continuous process, I don't mean throughout the audit, I'll be doing only planning. See, throughout the audit, if I'm doing only planning, when I will do the audit? So that is not what my intention. So when I say audit planning is a continuous process, what is my intention here is at the beginning of the audit, we'll develop an audit plan, no doubt about it. But if during the course of audit, if at all any change is required to be made to my audit strategy plan, I should be ready to do it. It should not be like at the beginning I have developed an audit plan, I will stick to it no matter whatever happens. You can't say it like that. At the beginning of the audit, we develop an audit plan, and if at all any changes required, we should be ready to make that changes to the audit strategy and audit plan. That is what the meaning of audit planning is, a continuous process. So that's what they say. And once again, one more important statement is there here. Planning is not a discrete phase of an audit, but rather a continual and iterative process. So planning is not just a one-time activity. It is going to be a repetitive, continuous activity. It will happen again and again. That doesn't mean throughout the audit I will be doing only plan. No, at the beginning I will develop the audit plan. Throughout the audit, if at all any changes required, I should be ready to adopt that changes to my strategy and plan. That is what the meaning of the sentence. And planning often begins shortly after the completion of the previous audit, and it will continue until the completion of current year's audit engagement. So for the current year, the planning will begin the moment the last year's audit gets completed, then it will begin, and it will keep on going till the time the current year's audit gets completed. And if you plan the audit, what and all should be included in the plan? Here they say once again what and all should be included in the audit plan. So this will be same like the advantages or benefits of audit plan. So that is actually a kind of repetition. You can refer to that. Okay, so this is what regarding audit planning is a continuous process. Next one. Sir, preparation of audit strategy and preparation of audit plan, it is whose responsibility? Preparation of overall audit strategy, preparation of audit plan, it is whose responsibility? No doubt it is auditor's responsibility. See, when I say responsibility related terms, engagement partner. Yes, engagement partner is ultimately responsible for development of audit strategy and audit plan. There is no question about it. Do you think engagement partner will single-handedly prepare the audit plan? There is no doubt audit strategy and audit plan are the responsibility of auditor, engagement partner. Do you think engagement partner without involving anybody single-handedly will he develop the entire audit strategy and plan? No. He will involve different persons in the development of audit strategy and audit plan. Sir, whom he will involve? Will he involve engagement team members? No doubt about it. So engagement partner will definitely involve all his engagement team members in the development of audit plan. Why? Because if you involve your engagement team members, you will come to know what are the capabilities of your engagement team member, and accordingly you can do better allocation of the work, because of which overall effectiveness of the audit will get improved. So there is no doubt engagement partner is going to involve his engagement team in the development of audit plan. Do you think is there any requirement to involve management, clients management and clients staff also in the development of audit strategy and audit plan? Yes. Even the auditor is required to involve the client's management and staff also in the development of audit plan. Why, sir? Why? Because in various circumstances, you need the help of the client's staff or management to proceed further with your audit. For example, you wanted to conduct inquiry. If you want to conduct inquiry, at that point of time, the client's staff should be available. So if you don't let them know when you are going to conduct the inquiry, if they are not available, your entire audit procedures will get affected. So that's why, yes, there is a requirement to include even the management and clients staff also in the development of audit planning strategy. But one thing you have to be very careful, when you involve the clients staff and management, don't discuss a detailed audit plan with them. Discuss only whatever their involvement is required. Nothing but you let them know when their presence is required during our audit. That's all. Don't discuss the detailed audit plan and audit strategy with the client's management and staff. Sir, why? What will happen? If you discuss the detailed audit strategy and audit plan with the client's management and staff, they will come to know what audit procedures you are going to do, what techniques you are going to follow. Then they will take all the precautions to make sure that no misstatement will come to your notice. So you have to involve, but make sure that you are not discussing the detailed audit plan and audit strategy with the client's management and the client staff. But no matter how many people you will involve client also, you'll involve client's management also, you will involve engagement team also, but ultimate responsibility for development of audit strategy and audit plan is always resting with the auditor. Understood? Next one. So write a short note on changes to planning decisions during the course of audit. I have already told you, yes, during the course of the audit, if required, we are required to make changes to our audit plan. Sir, first of all, why the need will arise to make the changes to the planning decisions? That could be because of unexpected events. Sometimes unexpected events could happen, which will require you to make the changes to your plan and strategy. Or sometimes there could be change in conditions, circumstances, whatever are present at the time when you have developed the audit plan. The same circumstances might not be there when you are actually executing it. Then also you might be required to change your audit plan. Or sometimes auditor might come to know about extra information which was not available at the time of developing the audit plan. The time of developing audit plan, you didn't had some information, but now you got to know about that information. Then also you might think of making changes to your audit plan and strategy. So these are all the various reasons why changes to the planning decisions may be required. And if at all changes are required, yes, you are required to make changes to your audit strategy, plan and program. Understood? Next. This is one more important question, ninth question. What are the factors that affect the direction, supervision and review of the engagement team members? See, as I have told, if I got audit of some client, engagement partner will not single-handedly go and do the audit. So there will be engagement team. There will be engagement team. For example, 10 engagement team members have gone to the client X Limited and they're doing the audit. Now, each and every engagement team member will be given some work, he will do it. Now, these engagement team members, do you think, do they need some direction? Yes, obviously. Why? Because sometimes my engagement team members might not know what exactly needs to be done. For example, one of the engagement team member is a newly joined article assistant. He don't know what exactly needs to be done. Does he require the direction or not? Does he require instructions from the engagement partner or not? Yes. So engagement partner is required to give direction, give instructions to his engagement team, and he has to supervise them. If at all any engagement team member is getting stuck, so who is required to help them? Who is required to supervise them? Engagement partner. Similarly, once the engagement team members have done their respective work, can the engagement partner blindly believe it, or he needs to verify the work done by the engagement team members? Once he needs to verify the work done by the engagement team members work, that means he has to review. So there is no doubt auditor should review, auditor should provide direction, he should supervise and he should review the work done by engagement team members. But how much amount of direction, what extent of instructions you are required to give, what extent of supervision you have to do, and how much amount of verification you have to do, that depends on what factors. Should you give more direction? Should you give more review? Should you verify more, or should you verify less? This depends on what factors. What are the factors which affect the direction, supervision and review of engagement team members? Very simple, guys, very simple point. So if your client's operations are very complex, your client is engaged in a complex business, there you required to give more direction, more supervision, more review. If your client is not doing so complex transactions, he is doing simply a retail business, it is not complex, then you give less direction, less supervision, less review. And it also depends on areas of the audit. Sometimes in the client's financial statement, some areas are more complicated. In that areas, I will give more direction, more supervision, more review. Some areas will be less complicated. In that area, I will give less direction, less supervision, less review. It also depends on assessed risk of material misstatement. If the risk of material misstatement is very high, I have to give more direction, more supervision, more review. If the risk is low, I will give less direction, less supervision, less review. And it also depends on competence and capabilities of engagement team members. If the engagement team members are all experienced staff, they have done this kind of audits previously so many number of times, so since they already have experience in this area, I will give less direction, less supervision, less review. On the other hand, my engagement team members are all new, So they don't have enough of expertise in the audit. They don't have enough of capability. They have not done this kind of audit previously. Then I will give more direction, more supervision, more review. So these are the various factors which will decide what extent of direction, supervision and review the engagement partner has to do. And talking about documentation of overall audit strategy and audit plan. See, whatever overall audit strategy you are developing, whatever overall audit plan you are developing, is it required to be documented or will you throw it away? It is required to be documented. Why? Because during the course of audit strategy and audit plan, we take a lot of crucial decisions. We take a lot of important decisions. So definitely whatever overall audit strategy and overall audit plan, whatever you have developed, that should not be thrown away. That needs to be documented. That needs to be what? Documented. Sir, what and all you will document? So as I've told, you will document your overall audit strategy and developing that overall audit strategy, with whom you had communications, what is your final audit strategy, what is your audit plan, which area was allocated to which person, and if at all you have made any changes to your audit strategy and audit plan, that revised audit strategy and audit plan, and what are the reasons for making that changes to the audit strategy and audit plan. So all that things are required to be documented. So 100% documentation of audit strategy and audit plan is very much required. So with this, basically we are done with most important discussion relating to audit strategy and audit plan. So two components we are done in the planning. The next part, the next few questions we are going to talk about audit program. The next few questions we are going to talk about audit program, which is the last element of the planning process. So if we discuss that audit program, our discussion of SA 300 will be over. Once we are done with that, then we will take it up materiality. Okay, so let us proceed further now. So let us start talking about audit program. See, we have already seen what is this audit program in our discussion of introduction. So I told that audit program is actually the most detailed version of the audit plan. Nothing but in the audit plan, whatever time we have decided for a particular area, whatever person we have assigned to that particular area, what he is exactly supposed to do, what instructions he has to follow, what procedures he has to follow, how much extent of checking he has to do. So all that things will be included in something called audit program. So the same thing has been included here in the meaning. An audit program consists a series of verification procedures which are required to be applied to each and every item of that financial statement, and we can also call it as implementation guide for audit plan. So we have audit plan in place now. For that we need implementation guide. That implementation guide is actually the audit program. And not just that, in other way, if I have to put it, we detailed plan audit program is nothing but a detailed plan of applying the audit procedures. So whatever plan we have, how we can apply that plan, the detailed audit procedures will be listed down in a document that we call it as audit program. And one more thing here, do you think we can develop one standardized audit program which can suit the requirements of the all clients? Can we have one single audit program which will meet the requirements of all the clients? No, we can't standardize the audit program. What we should do, depending on the requirements of each and every client, we have to customize our audit program. We can't develop one standardized audit program which suits for all the clients. Why? Because client to client transactions change, industry to industries changes will be there. The way in which one entity is operating, the same way the other entity might not operate. Internal controls will change. So a lot of things will change. So we can't develop one single audit program, one standardized audit program. We can't develop it for all the clients. We have to make changes to our audit program and we have to customize our audit program as per the requirements of each and every client. Sir, what points I have to consider in development of audit program? If you have to develop the audit program, what points you have to consider? We should always stay within the scope and limitation of the assignment. So when developing audit program, you always try to stay within what is your scope and what is your limitation. Include only those instructions, keeping in mind your scope of audit and limitation of your assignment. And out of various evidences, determine which evidence is reasonably available and identify the best evidence. So, and you try to include those procedures in the audit program which will try you to get the best possible evidence. So that's what this is in the third point. Apply only those steps and procedures which are useful. Don't unnecessarily overload your audit program with unnecessary steps. And consider all possibilities of error. Try to include instructions after considering all different possibilities of error. Then you have to include, you have to develop the instructions. And even you need to include coordination of the procedures also. In your audit program, you have to even include the coordination requirements also. Like in the audit program, I have to say the person, whoever is verifying the purchases, he has to coordinate with The person whoever is verifying creditors, the person whoever is verifying the sales, he has to coordinate with the person whoever is verifying debtors. So like that, in your audit program you have to even include the instructions regarding coordination of the works also. Sir, what will be the elements of the audit program? They might also ask you a question, what will be the elements of audit program? Audit program should always be in a written format. Oral instructions will not be enough. You have to develop one standard, you have to develop one written audit program, and in that audit program you have to include your objectives, and also it should contain instructions which you are giving to your assistants. In that audit program you have to mention whether reliance on internal controls could be placed or could not be placed, and even you have to include timing, within what time you are supposed to complete all that instructions. The timing is also required to be included, and whatever audit program that you are developing, that should be in line with your audit plan. You should not deviate your audit program with the audit plan. Whatever audit plan you have designed, that that audit program should match with that audit plan, though both should not be contradicting with each other. Next one, and whatever audit program that you have developed, that needs to be periodically reviewed, like the way we review audit strategy and audit plan and make changes if required. In the similar way, you have to periodically review the audit program, and if you think that yes, change is required to be made to this audit program, you should be ready to make that changes to the audit program. Clear? So like the way we review our audit strategy and audit plan, even audit program is also required to be reviewed on a regular basis, and if at all any changes required, we should be ready to accommodate that changes to our audit program. Clear? Then we have a few set of questions like, what are the advantages of audit program? So what will be advantages if you have an audit program in place? What will be the advantages? Very simple. It provides the assistants carrying out the audit with a total and clear set of instructions. It will act as a clear set of instructions for my engagement team members. It will give you total perspective of the work, in which area, how much time you have to spend. So it will give you overall perspective of the entire audit. And selection of assistants for the job becomes easier. If you see this advantage is there for audit strategy also, this advantage is there for audit plan also, this advantage is once again there for audit program. Common point, selection of better article assistants or selection of better assistants for the job. Next, there is always a danger of ignoring or overlooking certain books and records. See, sometimes if you don't have a program, what will happen is we tend to forget certain areas. But if you have a program in place, we will not forget any area. We'll try to cover each and every important area in our audit. And the principal, that is the engagement partner, can control the progress of the various audits. You can also have a track of the progress of the audit if you have a program in place, and it serves as a guide for future year audits also. If you have an audit program for the current year, that will help as a guide for the development of audit program for the subsequent years as well. And a properly drawn up audit program serves as evidence in the event of any charge or charge of negligence being brought against the auditor. If at all tomorrow someone is making a claim against you, this person did not do the work properly, this person is negligent, if someone is raising fingers at you, I can show my audit program as a evidence. I can take the protection of the audit program. Boss, see, all these instructions we have followed. Still, if your opinion has gone wrong, that is because of inherent limitations, not because of our mistake. So even audit program will come to your rescue in case if any negligence is brought against the auditor. And sir, what will be the disadvantages, sir? See, having audit program is not just having advantages, it also comes up with some disadvantages. Sir, what are the disadvantages? The work may become more mechanical. See, some article assistants feel that since audit program we will include all the instructions, some article assistants might feel that, see, here there is no scope for doing any extra work, so my partner is giving me a set of instructions, I have to blindly follow it. So the engagement team members feel that their work is becoming more mechanical. There is no application of mind. And sometimes the program often tends to become rigid and inflexible. Sometimes what will happen is some engagement partners, what they will do is they will develop a audit program for 1 year. The same audit program, they will use it year after year. For 3-4 years, they will use the same audit program. So if they use the same audit program, what will happen is the changes in the client might not get incorporated in the audit program. Because of that, audit effectiveness might be lost. But this can be overcome if the engagement team members remain cautious and year after year they try to understand the changes happening in the client's business and make that suitable changes in audit program. If they are proactive, they can overcome it. But most of the engagement team most of the engagement partners will not do it. They will develop one audit program, follow the same thing for 3-4 years. But during this span, when changes happens, when changes in the client's business happens and no respective changes are made in the audit program, it might tend to lose its effectiveness. And finally, inefficient assistants may take shelter behind the program. Sometimes what will happen is some inefficient assistants, those engagement team members who are not so good in their work, what they will do, they will try to take the shelter under audit program. If they are unable to identify misstatement, they will simply say, you did not include that instruction in the audit program. No, that's why I'm not able to find out the misstatement. So inefficient staff might try to take the shelter under audit program. Why? Because in the audit program, clear set of instructions will be there. Take for example, there is some misstatement which is clearly visible. He can easily find out with his common sense. But our engagement team member is a lazy fellow. He did not even identify the misstatement which is clearly visible on the face. And if someone went and asked him, boss, why you are unable to find out the misstatement, this engagement team member is telling, you did not tell me the instruction. So like this, inefficient staff might try to take shelter under audit program in some circumstances, and a very strict audit program, a very rigid audit program may kill the initiative of efficient and enterprising assistants. Sir, what is the meaning of this? As I have told, audit program is going to contain set of instructions, no? So some assistants will be might be very proactive. They always have that initiative mind. So they always want to explore new things. They always want to contribute something extra. But if the engagement partner is very strict, he's telling, I give you 10 instructions, only follow that 10 instructions. It will kill the initiative. So whatever their proactiveness is there, that will be suppressed. So that is also one disadvantage of audit program. So the audit program comes with advantages as well as disadvantages also. Clear, everybody? So with this, we are done with revising audit strategy, audit plan, and audit program. So SA 300 related discussion we are done with. Okay. So next we have to talk about materiality, which is relating to SA 320 related discussion we have to proceed ahead with. So let us now try to revise the content of SA 320. So SA 320 is a standard which is actually talking about materiality. So let us try to understand what exactly is this meaning of this term materiality, how to determine that materiality, and what does SA 320 say about the materiality. We will talk about that in a detailed manner. Guys, if you remember, the term material is very fundamental term which is used in the subject of audit. So if you remember the discussion whatever we had earlier, when we revised the chapter Introduction to Audit, I told that one of the objective of the auditor is to express an opinion whether the financial statements are free from material misstatements. So one of the objective of the auditor is to express an opinion whether financial statements are free from material misstatements. See, in the objectives of the audit, they did not just use the term misstatement, they have joined that term misstatements with another term called material. So what exactly is the meaning of this term material? See, materiality is something which is very relative term. Materiality is something which is very relative. So it is not something which is absolute term. So what is material? See, this the simple dictionary meaning of the term, if I have to give other terms for this term material, I can call it as something which is very significant, something which is very important, something which is very major. So that we call it as material. So what is material? That we can't absolutely define, that we can't absolutely say, see, this much amount, 10 lakhs will be material, 1 crore will be material, 10 crores will be material. We can't decide what is material in absolute terms. Materiality is something which is very relative term. Materiality is something which is very relative term. See, whatever is material in all the circumstances, we can't define. So something which is material in one entity might not be material in another entity. So like if I take you back to the example, whatever I have used in the chapter Introduction to Audit, for example, if you are conducting audit of the Reliance Industries Limited and you came to know that in that entity 1 crore amount of misstatement has happened, this might not be material for you. Whereas if the same 1 crore amount of misstatement happens in an entity which is having a turnover of 100 crore rupees, now you will say, yes, this 1 crore amount of misstatement is material. So what is material, what is not material, that all depends on the facts and circumstances of each and every case. That all depends on facts and circumstances of each and every case. We can't absolutely define the term materiality. It is highly relative term. It is subjective term. It is highly relative term. It is highly subjective term. But the standards have tried to define when we call a misstatement as material. When we are going to call a misstatement as material, the standards say that a misstatement will be considered as material if it could influence the decision of users of the financial statements. because of a misstatement, if the user's decision is getting influenced because of a misstatement, if the user is ready to change his decision, such a misstatement, the misstatements which could influence the decision of users of the financial statements, that we are going to call it as a material misstatement. But what is material, what is not material, that has to be decided by the auditor himself using his professional judgment. So the auditor has to use his knowledge, experience and training and determine what is material, what is not material. There is no hard and fast rule anywhere stated. Now, sir, how the materiality will be decided? See, mostly in most of the circumstances, materiality is something which will be expressed in numbers. So in most of the cases, we decide materiality in quantitative terms. This much amount is material, 10 lakhs is material, 1 crore is material, 10 crores is material. So mostly we express the materiality in quantitative terms. But in some cases, some qualitative aspects also could be material. We can define materiality even in qualitative aspects also. Like for example, giving a disclosure regarding going concern is very, very important. So if the management gives some wrong disclosure regarding going concern, that is a material misstatement. See, here I am deciding the misstatement's materiality not on the basis of the value. Sometimes I define whether a item is material or not, even considering the qualitative aspects also, like accounting policies, fundamental accounting assumptions. So these are also material. So don't always assume that when I say materiality, it will always be something which will be expressed in numbers. No, sometimes even qualitative aspects also will be also material. So now how to define the materiality? So we understood we have to express our opinion whether financial statements are free from material misstatements or not. But if I am conducting audit of some so-and-so client entity X Limited, how I will decide in this client X Limited, while I am conducting the audit of this client X Limited, what amounts to materiality, how can I define it? How can I decide this much amount is material, 1 crore is material, 10 crores is material? How can I decide that materiality amount when I'm conducting audit of any entity? Here, SA 320 will tell us an approach. SA 320 will tell us an approach which we are supposed to follow in order to decide that materiality level. Once again, I am telling you, SA 320 will not give you exact rules. SA 320 will only give you approach. So what SA 320 says is, you have to decide materiality in such a way that first you need to determine a percentage, and that percentage, whatever you have determined, that has to be multiplied with the benchmark. You have to decide one percentage and you have to choose one benchmark. That percentage, whatever you have chosen, that has to be applied to the benchmark. Sir, you are telling a percentage has to be decided. How this percentage has to be decided? Once again, auditor's professional judgment. The standard did not say it has to be 1%, 2%, 5%. The standard did not say. As an auditor, you use your professional judgment and decide certain percentage. For example, as an auditor, I used my professional judgment and I decided 5% as materiality level. Now this 5% should be multiplied with some benchmark. You have to take certain benchmark. Sir, what is benchmark? Benchmark could be anything from the financial statements. It could be turnover, it could be profit, it could be net profit, it could be gross profit, it could be net worth, it could be total expenses. So like this, any item of the financial statement can be taken as a benchmark. Sir, you are telling these many items can be selected as a benchmark. Out of this, which one I have to choose, sir? Once again, it depends on the professional judgment. Once again, it is going to depend on professional judgment. So any item of the financial statement, any item of asset, liability, income, expense, whatever it is, any item of the financial statement can be taken as a benchmark. Sir, but what has to be selected out of all these options? Which one will be appropriate? That has to be decided by the auditor himself, once again applying his professional judgment. Assume that using my professional judgment, I have decided turnover as a benchmark. Have decided turnover as a benchmark. So I will take this turnover. So assume that the turnover of the company is 100 crore rupees. So I have decided a percentage on my professional judgment. I have taken that benchmark from the financial statements. If I multiply, I will get a resultant value. Here it is 5 crore rupees. So now I will decide 5 crores will be my materiality level. If the misstatements, either individually or in aggregate, if they exceed this value of 5 crore rupees, then I will consider financial statements contain a material misstatement. On the other hand, if the client's financial statements contain a misstatement, but this value is less than 5 crore rupees, then I will not consider it as a material misstatement. I will not give the modified opinion. Okay, so what I have told you till now, how to decide the materiality level. So first you have to select a percentage, that you have to multiply it with the benchmark. Clear? And what could be taken as a benchmark? All that we have seen. Now, few more things to talk about it here. As per SA 320, materiality has to be decided at two levels. Materiality has to be decided at two levels. One is overall materiality and the other one is performance materiality. So as an auditor, you have to decide materiality at two levels. One is overall materiality and the other one is performance materiality. Sir, what is this overall materiality? What is this for performance materiality? Overall materiality refers to that materiality level which has been set for entire financial statements as a whole. The materiality level which is decided for the financial statements as a whole, that we call it as overall materiality. Take for example, I'm conducting audit of some entity. I have taken the balance sheet. The total assets are 100. The total liabilities are also 100. So I told that I will consider these entire financial statements will be materially misstated if the amount of misstatement exceed 2 crore rupees. So this 2 crores is a materiality level which I have decided for the entire financial statements. So the materiality level decided for the entire financial statements, that I call it as a overall materiality. Now assume that now in this balance sheet the total of the assets is 100. Now I will see the breakup. For example, fixed assets are 50 crore rupees, inventory is 30, trade receivables is 15, cash and cash equivalents is 5 crore rupees. Now what I am doing is, see, if I keep for the entire financial statements a materiality level, sometimes individual misstatements could be there which could be less material when compared with overall materiality, but collectively they could be more material. For example, if I found one misstatement of 5 lakh rupees in fixed assets, so I might feel that, if some 50 lakh rupees of misstatement I have found it in the fixed assets. Now since 50 lakhs is less than 2 crore rupees, I might ignore it. Why? Because it is less than my overall materiality level. Like this small misstatements could be there in other items. But if I compare it with the overall materiality, I can ignore it, which individually might not be material, but collectively when I take the aggregate value, then it could be material. So in order to avoid that risk, what we do is, first we decide the materiality level for the entire financial statements as a whole. After that, for each and every item of the financial statement also, we decide one more level of materiality. So for the entire financial statements, I have decided if the misstatement exceed 2 crore rupees, then I will consider entire financial statements as materially misstated. And after that, what I am saying is, for each and every item, I am going to fix a separate materiality level. So I am telling here, if the fixed assets contain 30 lakh rupees of misstatement, I will consider fixed assets as materially misstated. If the inventory contains 10 lakh rupees of misstatement, then I will consider inventory as materially misstated. If the trade receivable contains 5 lakh rupees of misstatement, then I will consider trade receivables are materially misstated. If the cash contains 1 lakh rupee of misstatement, then I will consider cash as materially misstated. So if you pay close attention here, I am deciding the materiality for each item of the financial statement separately. That I call it as performance materiality. And one more thing, between overall materiality and performance materiality, which one will be generally lower amount? Performance materiality will ordinarily be lower than the overall materiality. Overall materiality will be a bigger figure, whereas the performance materiality will be a smaller figure when compared with the overall materiality. So as an auditor, as per SA 320, you have to decide the materiality at this two levels. Everybody comfortable till here? Now, so let us see what else the standard says. So we have seen what is this materiality and all, meaning of materiality and all we have seen, and how to fix the materiality. As we have seen, the materiality fixation will happen in such a way that first we will take one appropriate percentage. That appropriate percentage will be applied with the benchmark. And here you have an important sentence which is having a chance of getting tested in the true or false statements. This one: generally the percentage applied on profit before tax benchmark is usually higher than the turnover benchmark. Very important sentence, guys. High chance of getting tested in the examination as a true or false statement. See, assume that you can take anything as a benchmark. No, see, I can take profit also as a benchmark. I can take turnover also as a benchmark. When I take profit as a benchmark, I will apply certain percentage. When I take turnover as a benchmark, then also I apply certain percentage. The percentage which you apply when you take profit as a benchmark will be higher than when compared with the percentage which you will apply when you take turnover as a benchmark. The percentage which you are going to apply when you take profit as a benchmark will be generally higher than the percentage that you will apply when you take turnover as a benchmark. I will give you a simple example. Assume that 100 crores is the turnover of the company. The profit of the company is 10 crore rupees. Now for turnover, if you have taken 1% as benchmark, you are taking turnover as criteria, and you are taking 1% as a 1% as appropriate percentage. So if you multiplied 1% into 100, you will get 1 crores as materiality level. But in order to get the same 1 crore of materiality, if you take profit as a benchmark, that 1% will not be enough. 10% you require. Why? Because profit is a smaller figure when compared with the turnover. So when you take turnover as a benchmark, you are taking a bigger figure. There, even if you apply small percentage also, you will get significant amount as materiality. But when compared with the turnover, profit will be a smaller figure. There you have to go for a bigger percentage in order to get a reasonable figure. Able to understand? I hope you are able to understand with the help of this example. And once again, I am telling you high chances of getting tested in the examination. So what is the sentence? Once again, I will take you through the sentence. This one. Generally, the percentage applied on profit before tax benchmark is usually higher than turnover benchmark. So whatever percentage that you are applying when you take profit as a benchmark will be generally higher than the percentage which you will apply when you take turnover as a benchmark. Why? Because profit is a smaller figure, whereas turnover is a bigger figure. Now, as per SA 320, how many levels of materiality you have to decide? 2 levels of materiality. Number 1 is overall materiality. Number 2 is performance materiality. So I have explained in a detailed manner what is overall materiality, what is performance materiality, and which one will be lower. Generally, performance materiality will be lower than overall materiality. Now, what are the factors in identifying benchmark? I told benchmark can be any item of the financial statement. Sir, out of all that options, which benchmark auditor has to choose? That is depending on his professional judgment. But what factors he will consider? See, ultimately, auditor only will decide which benchmark will be appropriate. But in taking that decision, auditor will consider various factors. So various factors auditor will consider, then he will decide, okay, this benchmark will be appropriate. So what factors he will consider? Once again, important paragraph, in so many cases, they have asked this question. In so many attempts, they have asked this question, what are the factors in identifying the appropriate benchmark? So the following are various factors for determining benchmark. As I have told, any of the asset, liability, income, expense, anything can be taken as a benchmark. Sometimes there will be indication in the applicable financial reporting framework itself. The applicable financial reporting framework itself will give you a hint what could be taken as benchmark. Like if you have a look at Schedule 3, Schedule 3 says any item which exceeds 0.5% of the turnover has to be shown separately. That means indirectly Schedule 3 is giving a hint that you can take turnover as a benchmark. It depends on capital structure and ownership structure. It depends on information needs of majority of the users in the industry. See, in FMCG sector, people are more interested to know about revenue than profit. So if I am conducting audit of FMCG sector, I can take turnover as a benchmark. In case of IT companies, people are more interested to know about profits. If I am conducting audit of IT company, I will take profit as a benchmark. And even it also depends on law or regulation. Like for example, if you pay attention to the Income Tax Act, it says any cash payment which exceeds 10,000 that will be disallowed. Now you tell me, while verifying cash payments, what is the materiality amount? 10,000. How you have decided it? As per applicable law or regulation. And what are various examples of benchmark? As I have told, anything could be a benchmark. It could be profit before tax or net profit after tax also could be there. Turnover from continuing operations, gross profit, total expenses, net assets, net worth, whatever it is, everything can be taken as a benchmark. Sir, once I have selected benchmark, for example, considering the above factors, considering these factors, I have decided that turnover will be benchmark. From where you will take this turnover? Turnover is a benchmark. You have decided you want to use turnover. From where you will take this turnover figure? See, if the current year financial statements are ready, from the current year financial statements only you will take the figure. If you are starting the audit after the year gets closed, after financial statements are prepared, then what you can do is you can select the turnover figure from the current year financial statements only. But in case if you have started doing the audit even before current year financial statements are over, then what you will do? Then you will start looking for other sources. So if current year financial statements are ready, from the current year financial statements only, we will take the benchmark. In case if the current year financial statements are not ready, then where we will take this figure from? We can go to prior periods financial statements. We can refer interim financial statements, quarterly financial statements we can refer. Even we can take the benchmark from budgets also. Even we can take the benchmark from budgets also. So these are all the various sources from which you can select the benchmarks. Clear, everybody? So this is all the major discussion from SA 320. We have understood what is materiality, meaning of materiality, determination of materiality, levels of materiality, factors in identifying the benchmarks, various examples of the benchmark, and sources for selecting appropriate benchmarks. See, one more point I want to concentrate here. See, generally at the beginning of the audit, we decide this materiality level. Following the techniques, whatever we have seen till now, we will decide the materiality level. See, whatever materiality level that you have decided at the beginning of the audit, are you allowed to revise that materiality level? Yes. Whatever materiality level that we have decided at the beginning of the audit, that can be revised. So sometimes during the course of the audit, there could be change in circumstances. We might get to know additional information, or sometimes what could happen is we might have taken the benchmark from budgeted financial statements. So if the budgeted financial statements are in close range with actual financial statements, no need to revise materiality. But when you have taken benchmark from the budgeted financial statements and the actual financial statements differ significantly from budgeted financial statements, then also you need to revise the materiality level. So I will give you an example for this, but first let me make the point clear. The point I want to convey here is at the beginning of the audit, we decide the materiality level. But during the course of the audit, because of the change in circumstances, if you want to revise the materiality levels, are you permitted to do it? Yes, you have to do it. Then only your audit will be effective. Clear, everybody? So that's what they say here. So yeah, this is the point which I'm talking about. So the overall materiality and the performance materiality may need to be changed as and when the audit progresses. So as and when your audit progresses, you might be required to make changes to your overall materiality and performance materiality. Because of what circumstances? Sometimes there could be change in circumstances. Sometimes you might get to know additional information which might require you to change the materiality levels. Sometimes there will be a change in actual financial results than the anticipated results. So as I have told, assume that you are conducting audit of 22-23. By the time you have started doing audit, financial statements are not yet ready. So you have taken benchmark from budgeted financial statements, from anticipated results. For example, as per the budget, the current year budget is 100 crore rupees. So you have taken that as a benchmark. Now, during the course of audit, year got closed, actual financial statements are ready. See, when the actual financial statements, the actual turnover is also in the range of 90 to 110 crores, no need to revise the materiality. Why? Because actual results are close to budgeted results. But assume that in the actual financial statements, the turnover was only 60 crore rupees. But you have taken the benchmark as per budgeted financial statements, and actual financial statements differ significantly from budgeted financial statements. Now what you should do? Revise the materiality level. So like this, or sometimes there could be an increase in the estimated risk, that also might require you to change the materiality level. Or sometimes auditor might get to know about new aspects regarding the client's business. Sometimes because of the change in knowledge of the client's business, also auditor might be required to revise the materiality level. So these are all the various reasons because of which auditor need to revise the materiality level, and in fact you have to do it. And is there any requirement to document the materiality? Yes, whatever materiality that you have decided, the background workings, how you have chosen the benchmark, what is the overall materiality, what is performance materiality, if at all you have changed the materiality levels, what are the revised materiality levels, and what are the reasons because of which you have changed the materiality levels. All these things are required to be included in the audit documentation. So you have to revise the materiality if required, and whatever materiality related work you are doing, all that determination of materiality, revision, reasons, calculations, everything also should form part of your audit documentation. So this is the major content from SA 320, which is important from the examination perspective. This is the actual concept here in SA 320. I hope you guys have understood that concept of SA 320. Clear? Everybody able to understand till here, able to follow whatever I'm trying to explain? So now since we are done with SA 320 also, as promised, I have one more standard pending for revision, SA 450. I have not yet revised it yet. I told that will be better if we revise it after discussing the concept of materiality. So since now we are done with the materiality, it's the proper time, it's a suitable time actually to discuss or to revise SA 450. So let us try to understand SA 450. See all the content of the standard SA 450, whatever content is there in the standard, that I have summarized in the form of this simple chart. So this is a comprehensive presentation. When it comes to other standards, as you could have observed, I have prepared handwritten charts. But as you know, right, when we keep on writing, our handwriting doesn't cooperate with us in some times. So I was lacking that focus in writing the content of this SA 450. I became a bit lazy when I have to prepare the summary of this SA 450. So what I have done is I have made use of some software, and the chart, whatever I wanted to do by way of handwritten notes, that I have prepared it using some software. But whatever it is, the outcome is before you, and actually it's much better also here. It's actually much better also. Why? Because my handwriting, some people might get to know about it, some people might not understand it, but if we type the information, everybody can watch it, everybody can understand it. Is actually a good thing. If possible, I will try to convert whatever remaining standards, handwritten standards are there. If time permits me, I will try to convert that also into this typed format, and I will upload it. But for the time being now, I did this experiment only on SA 450. So we'll try if time permits. Actually, I'm very much occupied with various other things. If time permits, definitely I will convert all the handwritten charts, whatever are there for SS, into this typed format. Right. So SA 450 actually talks about what? SA 450 is going to talk about evaluation of the misstatements identified during the audit. What does it say 450 talk about? The title itself says evaluation of the misstatements, whatever have been identified during the audit. See, as an auditor, for example, you are an auditor, you are appointed as auditor of the company X Limited. Now, when you start doing the audit, you actually start doing the audit. First, you will perform risk assessment procedures, understand about entity, environment, and its internal control. Then you perform compliance procedures. By that, you will try to verify internal controls. On the basis of that, you decide on nature, timing, and extent of substantive audit procedures. Now, while performing substantive audit procedures, actually, you will find out the misstatements. So, by performing these substantive audit procedures, you will find out the misstatements, no? So, assume that as an auditor, so let me use some space here. So assume that as an auditor, you are conducting audit of certain client X Limited. Okay. So just give me a moment. So you are conducting audit of the client X Limited. And while conducting this audit, assume that you have found some 10 misstatements. You have found some 10 misstatements. See, the moment you find the misstatements, immediately will you consider it as material or not? Or will you immediately modify the opinion? The answer is no. See, practically what will happen is, while I am doing the audit, if I came across any misstatements, especially if I came across misstatements which have been caused because of errors. For example, one simple example I will give you. I came to know that there is certain expenditure. Okay. Some 10 lakhs worth of expenditure is there. It has to be taken to the capital expenditure. It has to be capitalized. But I have seen that the client has charged it to revenue expenditure. The client has charged it to revenue expenditure. Might be the person who is required to pass this accounting entry may not have proper understanding of the accounting standard. So that's why he thought it as a normal expenditure and taken it to the statement of P&L. It was a pure error. So like this, errors also will be there. Sometimes misstatements might have caused because of unintentional matters also. So like this, whenever I came across the misstatements, if I found out the misstatements during the course of the audit, immediately I will not consider it as material or not, and even immediately I will not modify the opinion. So whatever misstatements that I have identified, first as an auditor, what I should do is take it to the attention of the management. I will take it to the management. Sir, while conducting the audit, I have come across these 10 misstatements, and ask the management to correct them. Ask the management to correct the misstatements. So generally what will happen is, once I found out the misstatements, I will take it to the management, ask them to correct the misstatements. See, now if the management corrects the misstatements, that is a good thing, no? The management is accepting their mistakes. Okay, sir, these many errors we have done. Don't worry, sir. We will rectify the misstatements. We will try to pass the rectification entries. So if the management corrects the misstatements, that will be a good thing only, no? Ultimately, who will be benefited? The users of the financial statements will be benefited. So first, if I find the misstatements, whatever misstatements that I have identified, I will go and communicate that with the management and ask the management to correct the misstatements. See, if the management corrected the misstatements, gave the proper effect, then the financial statements will give true and fair view only, no? There unnecessarily I will not modify the opinion. When I will actually try to modify is, I have found out the misstatements, I have identified the misstatements, I will take it to the management's attention, I will ask the management to correct them. But if the management is not ready to correct, then whatever uncorrected misstatements are there, I will evaluate the impact of that uncorrected misstatements. If they are material, I will modify the opinion. If they are not material, I will not modify my opinion. So if I try to summarize whatever I am trying to say here, if I am doing the audit, and during the course of the audit, assume that I have found out 10 misstatements. I communicated with management. Assume that out of that, management corrected all the 10 misstatements. Now there are no uncorrected misstatements. So these 10 misstatements I have identified. These 10 misstatements I have identified. And management corrected all that 10 misstatements. Here, uncorrected misstatements will be 0. Uncorrected misstatements will be 0. I will not modify my opinion. Why? Because management has given the effector to all the misstatements. Take another case. Assume that I have found out 10 misstatements. So identified misstatements, the misstatements which auditor has found, that I call it as identified misstatements are 10. I communicated with the management. Now out of that, management corrected 6 misstatements, and management did not correct 4 misstatements. So these 6 misstatements becomes corrected misstatements. I need not bother about it. Why? Because management rectified it, and now the financial statements will not be misleading because of these 6 things. Now, whatever these 4 misstatements are there, they become uncorrected misstatements. They become what? Uncorrected misstatements, and the auditor will consider whether these uncorrected misstatements are material or not. If the uncorrected misstatements are material, then he will modify the opinion. If uncorrected misstatements are not material, he will not modify the opinion. Able to understand? So this is what exactly going to happen in the entire process of the audit. So first, auditor will identify the misstatements, communicate with the management. Now the management might take two options: either they might correct the misstatements, they might not correct the misstatements. If they correct the misstatements, well and good. If they are not correcting the misstatements, they become uncorrected misstatements, and the auditor will evaluate the impact of that uncorrected misstatements and determine whether they lead to materiality or not. If the uncorrected misstatements are material, he will modify. If they are not material, auditor will not modify. As simple as that. Clear, everybody? Able to understand? So this entire evaluation of the misstatements only they try to explain here in the form of a chart, in the form of material content they have given. That I try to summarize it in the form of a chart. This standard is also newly added standard under the new scheme, high chance of getting tested in the examination. So what is the objective of this standard? As I was continuously telling, every standard will have certain objective. Even SA 450 is also given with specific objective. So what is the objective of SA 450? The objective of the auditor is the auditor has to evaluate the effect on the financial statements on identified misstatements and uncorrected misstatements. That means as an auditor, you have to evaluate what is the effect of identified misstatements. Sir, what is the meaning of identified misstatements? As I have told, identified misstatement means misstatements found by the auditor. And what is the impact of what is the effect of uncorrected misstatements? What is uncorrected misstatements? As I have told, whatever misstatements that you have identified, you communicated to the management, and whatever management did not correct, that misstatements we are going to call it as uncorrected misstatements. So as an auditor, your objective is to evaluate what is the effect of identified misstatements on the financial statements and what is the effect of uncorrected misstatements on the financial statements. Clear, everybody? Next paragraph, the standard says you have to accumulate all the misstatements identified during the audit. See, misstatement can happen because of variety of reasons. Misstatement can happen from fraud, misstatement can happen from error. In the errors also different kinds of errors are there. So misstatement can happen because of various reasons. Should the auditor evaluate all the misstatements or one misstatement he has to evaluate? The auditor should accumulate all the misstatements which has happened because of various reasons. Whatever may be the reason, the auditor has to accumulate all the misstatements. Then he has to analyze what is the collective impact of all that misstatements on the financial statements. So that is what the meaning of this here. A misstatement may arise from variety of reasons. The auditor shall accumulate misstatements identified during the audit. Whatever misstatements he has identified, he has to accumulate all that misstatements other than those which are clearly trivial. Trivial means what? Negligent. So whatever negligent mistakes are there, whatever small misstatements are there, which are very negligible, which are very trivial, that you need not accumulate, that you can ignore it. For example, in the entire Reliance Industries Limited financial statements, I found some 10 rupees of mistake. So this is very negligible, clearly trivial. Trivial means negligible. So if you find some misstatement as clearly trivial, very negligible, that you need not accumulate, that you ignore it. So whatever misstatements are there which are not negligible, that you have to accumulate it. Understood? Guys, you have to understand the difference between trivial and materiality. Material means something which is significant. Trivial means almost negligible. You need not bother about it. So that we call it as trivial. Negligible items. Whatever negligible misstatements are there that you can ignore. Other than trivial, other than negligible, whatever items are there that you have to accumulate. All that misstatements you have to accumulate. So consideration of misstatements identified as the audit progresses. So when you start doing the audit, when your audit progresses, whatever misstatements are there regarding that misstatements, what you have to do. So first thing, as I have told, the auditor shall determine whether the overall audit strategy and audit plan need to be revised. So once you have done the audit, for example, you initially did strategy, you initially developed, so pay attention here guys, you developed audit strategy, audit plan, audit program. You performed audit procedures. From that, you obtained audit evidence. On the basis of that evidence, you have found out misstatement. Sometimes what will happen is, after you have found out all the misstatements, sometimes you might feel that whatever audit plan I have followed, that might not be appropriate. I might be required to revise my audit strategy, planning and program. Sir, when you will generally have that idea? So generally, as an auditor, you came to know that initially you thought that, okay, this client is very good entity. In this client, the chances of misstatements happening are very less. So I will allocate less amount of time. You have allocated less amount of time. You have completed the audit in 10 days of time. But within that 10 days of audit only, you found so many misstatements. And you found that whatever estimation I have taken, I have thought in this entity, the chances of happening misstatement are very low. That's why I decided 10 days. But now I came to know, after I got to know about the misstatements, I realized, okay, here the misstatements are very high. So might be I should not have spent 10 days of time. I should have allocated 15 days of time. It will be better for me if I go and spend some extra time in my audit procedures. So that is the first thing which you have to consider. So once you have identified all the misstatements, the first thing what you need to check is, on the basis of the misstatements, whatever you have identified, the auditor shall determine whether whatever audit strategy you have decided, whatever audit plan you have decided, is there any requirement to revise that audit strategy and audit plan that you have to decide. On what basis? On the basis of nature of identified misstatements and the circumstances of their occurrence. Looking at the size of the misstatements, looking at the nature of the misstatements, looking at the circumstances in which that misstatements have happened, you have to make a decision. Is there any requirement to make changes to my audit strategy and plan? That you have to decide. And also, aggregate of misstatements accumulated during the audit approaches materiality determined in accordance with SA 320. For example, as we have just seen, as per SA 320, by doing all the calculation, we decide materiality. No, assume that I came to know that materiality level is 1 crore rupees. After doing all the calculations as per SA 320, I decided materiality level as 1 crore rupees. Now I came to know that after I have accumulated all the misstatements, whatever I have identified during the audit, my misstatement came to 95 lakh rupees. My misstatement came to 95 lakh rupees. Now, since my accumulated misstatement is close to material misstatement, might be close to my material misstatement, close to the materiality level, might be if I spend some more time in the audit, might be I might find more misstatements, and actual misstatement might go beyond my materiality level. So if you come across two circumstances, any of these two circumstances, that is after you have performed audit procedures, after you have identified misstatements, you will accumulate. No, now looking at that misstatements, depending on the nature of identified misstatements and circumstances of their occurrence, and if the aggregate of the misstatements is approaching close to the materiality level decided, sit and analyze once, is there any requirement to make changes to your audit strategy and audit plan. If you feel it is necessary to make changes to your audit strategy and plan, revise your audit strategy and audit plan, try to spend some more time on performing audit procedures. Might be you will be able to find more misstatements. So that is the first step which you have to do once you have identified the misstatements. Second step, so once you have made the changes to the audit strategy, audit plan, once you have revised or not revised, after you have taken all that decision, next thing what you should do is, as an auditor, you have to request the management. What you have to request the management? I will request the management to examine the class of transactions, account balances or disclosure in order for the management to understand the cause of the misstatement. Sometimes repetitive misstatements you will be able to find out. Then what you will go to the management, or what you will do is go to the management and say, sir, this misstatement is happening very repeatedly. Take some time, analyze that particular transaction, analyze that particular account, find out what is the reason why this misstatement is continuously happening. You can request the management to spend some time on that. So if you find some misstatement which is of repetitive nature, you can go to the management, request the management to do a detailed examination of that particular account and find out what is the reason, what is the root cause of that misstatement. Ask the management to examine. And also you can request the management to perform the procedures to determine the amount of actual misstatement. See, generally you perform audit procedures on sampling. In the sampling only you found some 4 or 5 misstatements. Now you ask the management, sir, find out the reason and find out what is the actual misstatement in the entire transaction. On the basis of sample, I came to know there is 10 lakhs worth of misstatement. You try to do a detailed analysis and try to find out the reason for that misstatement and find out what is the actual misstatement in the entire population. That you request the management to do it. And also ask the management to make appropriate adjustments to financial statements after they have found the cause of the problem, after they have understood the reason for that misstatement, after they have decided what is actual amount of misstatement. Ask the management to make the changes. As I have told, ask the management to correct that misstatements. So that is the second step in consideration of misstatements. Number 1, we will decide whether there is any requirement to change our audit strategy and audit plan. Number 2, we will ask the management, we will request the management to examine the accounts, find out the cause of the problem, determine the actual amount of misstatement and ask them to do the adjustments to the financial statements. And finally, after you have requested, if the management has examined the transaction and they have detected, so yeah, if you read this, if at the auditor's request, management has examined the class of transaction, account balances and disclosure, and even they have corrected the misstatements also that were detected, the auditor shall perform additional audit procedures to determine whether misstatements still remain. So I told the management, sir, this misstatement is happening. They analyzed the reason. They found out the total amount of misstatement, and they even made the corrections also. Management came and told, thank you for bringing that misstatement to our notice, sir. We made the correction to the financial statements. Will you blindly accept? No. If the management is telling they have corrected the misstatements, you will perform additional audit procedures and try to verify, did the management correct all the misstatements, or the misstatements are still remaining in the financial statements, that you have to analyze it once again. So that is what the consideration of the misstatements identified as audit progresses. 3 steps, guys. First, we will decide, is there any requirement to change our audit strategy, plan and program. Number 2, you will request the management to make changes to examine the reason, to understand, to determine actual amount of misstatement and make the corrections. The management, following your request, they have examined the transaction and corrected the misstatements. Then you have to perform additional audit procedures to find out whether they corrected all the misstatements or any misstatements are still pending, that you will try to verify. Next one. So communication and correction of misstatement. Sir, why communication of misstatement is very, very important? Why can't we just simply decide the impact on the financial statements? You are telling, first, if you identified misstatements, first you have to communicate with the management. Why communication is required? Why can't we completely ignore and proceed with giving a modified opinion? Why? Because as I have told, see, ultimate objective is to make sure that financial statements are giving true and fair view. If you communicate with the management, if they correct the financial statements will not be misleading. No. As I have told, if you give the opportunity to the management to correct the financial statements, they will correct it. If they correct it, financial statements will give true and fair view. Ultimately, who will be benefited? The users of the financial statements will get benefited. And also, if you let the management know that what misstatements are happening, they will also analyze and they will also take precautionary measures, and they will try to make sure that in the future these kind of misstatements will not happen and they can reduce the risk. So that's why communication of misstatements is very, very important. So that's what they say here. The auditor shall communicate on a timely basis all misstatements accumulated during the audit with appropriate level of management, unless prohibited by law or regulation. Unless you are prohibited by law or regulation, in all the circumstances, you are required to communicate whatever misstatements you have identified with the management and those charged with governance. Sometimes law will prohibit you. Law will say, if you find any misstatements, don't communicate with the management, because they become cautious and they will try to mislead others. So in some cases, law or regulatory restriction will be there. Unless there is any legal or regulatory restriction, in all the circumstances, whatever misstatements you have identified, first you communicate with the management. Sir, why communication is important? Why? Because if you communicate with the management, it enables the management to evaluate whether those items are misstatements, inform the auditor if it disagrees. See, sometimes what will happen is auditor might have misunderstood. Sometimes there could be mistake from the auditor side also. He is in a wrong perception that it was a misstatement. Might be the actual intention of the transaction is wrong. So if you let the management know, they will explain why they don't treat it as misstatement. Why? Because sometimes auditor also might be under a wrong impression. So if you communicate with the management, the auditor also can rectify his mistake. Sometimes auditor might not understand the transaction properly and might conclude certain item as misstatement. So if you communicate with the management, if they disagree that is not a misstatement, they will explain you why it is not a misstatement, why it is a corrected treatment only. Next one. And it after you have communicated the misstatements to the management, as I have told, request the management to correct those misstatements. Sir, why you should give the opportunity to the management to correct the misstatements? Why? Because if you give them the opportunity to correct the misstatements, that will enable the management to maintain accurate accounting books. See, ultimate objective is to make sure that books of accounts and financial statements are accurate. So if you let the management know, if you give the opportunity for the management to correct the misstatements, they will correct it. Ultimately, financial statements give true and fair view. The readers of the financial statements will be benefited because of that. And sir, in case if the management refuses to correct some or all of the misstatements, if the management is not correcting, either some of the misstatements they are not correcting or all of the misstatements they are not correcting, then what you should do? Then as an auditor, you obtain an understanding of management's reason. First ask them. The management is telling, if as an auditor I found 10 misstatements, went to the management and told, sir, these 10 misstatements are there, please correct. Management is telling, no, we will not correct it, we will not correct them. So first, as an auditor, try to understand the reasons why the management is not ready to correct that misstatements. Ask them the reasons. Then, and the auditor shall take that understanding into account while evaluating whether the financial statements are free from material misstatements. Now management will give you some reasons. If you found those reasons are acceptable, see why management is not correcting is because they are having a valid reason. They are explaining the auditor, sir, actually you understood that item in a wrong way. That is not capital expenditure, that is revenue expenditure only. So management gave me good reasons. Actually, I only misunderstood. Well and good. If the management does not give you valid reasons why they are not correcting the misstatements, then what I will do? Then I will consider the impact on the auditor's opinion. So first you will communicate with the management, give them an opportunity to correct. If they are not correcting, try to understand the reasons, and on the basis of that understanding, evaluate whether the financial statements are free from material misstatements. Which means if the management gave you valid reasons why they are not correcting, or might be auditor is only under wrong perception, management explained it, well and good, we will not consider financial statements are containing material misstatement. On the other hand, if the management did not give me valid reasons why they are not correcting the misstatement, then I will conclude that uncorrected misstatements are material and I will give a modified opinion. Understood? Next. So evaluating the effect of uncorrected misstatements. So whatever uncorrected misstatements are there. So first you identified the misstatements, communicated with the management, management corrected some, uncorrected some. So whatever uncorrected misstatements are there, finally that you have to evaluate, that you have to analyze. So prior to evaluating the effect of uncorrected misstatements, the auditor shall reassess the materiality level determined in accordance with SA 320. As I have told, whatever uncorrected misstatements are there, that you will analyze whether those uncorrected misstatements are material or not. But before you evaluate that uncorrected misstatements, first decide whatever materiality that you have decided, is it required to be revised? Just in the previous standard I have told because of what circumstances you might be required to revise the materiality. So just analyze once before you evaluate the effect of uncorrected misstatements. Just analyze once, is there any requirement to revise the materiality level, that you analyze it. And then finally, the auditor shall determine whether uncorrected misstatements are material either individually or in aggregate. And so finally, after you have reassessed the materiality level, now you have to analyze whatever uncorrected misstatements are there, are they material or not material? And while making this determination, you have to consider certain factors. So what things you have to consider in determining whether uncorrected misstatements are material or not? Size and nature of the misstatement. Obviously, what is the size of the misstatement? What is the nature of the misstatement? In what circumstances it has occurred, and also what is the effect of the uncorrected misstatements related to prior periods. Sometimes you can even find out the misstatements relating to prior period, even consider the effect of that prior period related misstatements on the current year's financial statements. So after considering all these factors like size of the misstatement, nature of the misstatement, and the uncorrected misstatements of the prior period, consider the effect of all this and finally decide whether uncorrected misstatements are material or not. And even you have to communicate with those charged with governance. Communication not just with the management. As an auditor, you are required to even communicate with those charged with governance also. So what things you are required to communicate with those charged with governance? The auditor shall communicate with those charged with governance regarding uncorrected misstatements and the effect that they individually or in aggregate may have effect on the auditor's report. So whatever you have discussed with the management, out of that, whatever uncorrected misstatements are there, those uncorrected misstatements and what is the effect of that uncorrected misstatements, because of that uncorrected misstatements, what is the effect on your opinion, all these things you communicate with those charged with governance also once. And the auditor's communication shall identify material uncorrected misstatements individually. In that communication, whatever you are doing with those charged with governance, each and every individual misstatement, you try to highlight it. And the auditor shall request that uncorrected misstatements be corrected. If the management is not correcting, at least ask those charged with governance whether they can do something to make the management to correct the misstatements. And the auditor shall also communicate the effect of uncorrected misstatements related to prior periods. If at all, if you find any misstatements relating to prior periods, that also you communicate with those charged with governance. So not just communication with the management. As an auditor, you even try to communicate the misstatements with those charged with governance. And in addition to that, even you are required to obtain written representation from the management regarding the effects of uncorrected misstatements. So even ask the management to give a written representation. Ask them to give a written statement why they did not correct the misstatements, because of what reasons they have not corrected the misstatements. Even ask the management to give a written representations regarding uncorrected misstatements, and whatever document, whatever misstatements, whatever communication that you had, everything should be documented. Documentation regarding misstatements identified during the audit. So whatever misstatements that you have identified, everything should be documented, and particularly you have to include in your documentation the amount below which misstatement would be regarded as clearly trivial. As I've told you at the beginning, you have to accumulate all the misstatements other than which are clearly trivial. So how you have decided? On what basis you have decided certain misstatement as trivial? So the basis for your decision regarding trivial misstatements, that you document it. All misstatements you have accumulated, whatever complete misstatements are there, so all that misstatements also you have to include in your documentation. And finally, auditor's conclusion as to whether uncorrected misstatements are material or not. So what is your final conclusion? On what basis you have decided whether uncorrected misstatements are material or not material? Even that also include in your audit documentation. So this is what SA 450 is about. See, this is a revision, so we can't go much deeper into the concept. By now only I have spent close to 20 minutes of time on revision itself, so complete explanation will take even more time, but this is actually a revision. We have to restrict our explanation till here. I can't afford to spend more time on the standard, but I have covered each and every important content from the standard which is relevant for your examination perspective. So please refer this charts and also refer the material once. So with this, we are successfully done with audit strategy, planning and program, SA 320 talking about materiality, and SA 450 evaluation of the misstatements. Hope you guys have understood this.